Hello, this is Chuck Carnevale, and I'm the Chuck in the Markets Up Chuck. What I'm dedicated to is helping investors find attractively valued stocks to invest in their portfolios regardless of your investment objectives. I found a real gem today, at least I think, a company that is really well positioned in our changing environment. Everybody is looking for cleaner air, and everybody is aware of how hot the electric automobile industry is. And I've got a stock today that's very attractively valued, but yet has been rising dramatically and has good momentum. So here's one you might want to consider if you're looking for total return in a very high quality company. The company I'm talking about is BorgWarner, and it's engaged in providing technology solutions for hybrid and electric vehicles, but it also provides engine and drivetrain components, etc. And it's very well positioned. When you look at the earnings and price correlated fast graphs here, I think you see a very interesting picture. I want you to notice how the earnings is this orange line here, and the blue line is the normal PE ratio, and those have really been about the same. This stock trades around 14 or 15 times earnings normally. And notice how earnings growth was good, a little bit of softness in the recession, had some significant earnings drop during the last recession, but the company is really changing the nature of its business. It's getting heavily more involved in hybrids and electric vehicles, and they just made a major acquisition that I think is prompting the stock here recently. But what I want you to really see is coming out of the recession, how quickly this stock has grown. If I drop this chart to the last 8 years, you can see that earnings growth during these years was a double-digit earnings growth, although it did have a down year in 2015, followed by 8% growth. The stock was also very overvalued in 2013 and 14, and then in 2015 it became very undervalued, but since January 29th of 2016, the stock has averaged an annualized rate of return of 34.4% per annum, and I think the stock is worth $54 a share, and you can buy it today at $44.72. So this is an interesting stock. It pays a little dividend, 1.3% yield. Its dividend has grown at a very fast rate recently, although more recently it slowed down a little bit. Forecasts for future growth are 8%, and what I really like here is the discount to its intrinsic value, where the rates of return in the short to the intermediate term can be very attractive. Double-digit growth rates are available from this company. It's a $9.5 billion company and only has 35% debt to capital. BorgWarner is up about 3% today after announcing the acquisition to another company that's basically in the electric industry. So I think this is a very undervalued stock in an overvalued market. In the past, the market has applied very high valuations to it. So I think this is a great short to intermediate term play that can generate very substantial returns over the next year or two. But as always, I suggest you do your own research and due diligence. This has been Chuck Carnevale saying thanks for watching.